Good evening traders, it's Simon at Kairos Capital Markets with the weekly review of Aussie dollar and pound yen. So last week we spoke about the DXY moving upwards from its 618 pullback on the weekly chart. So here's the weekly chart here, and there's a 618 pullback there, price come down there, and now it looks like we're going to grind up higher. Clearly we've got a doji test there, but the doji is in the middle of nowhere at the moment, so I'm not particularly too fussed about it. On the daily chart though, the doji was formed just by testing the 94 level again, so you could say again this could be an inverse, this could be a head and shoulder pattern here itself. In general it's left shoulder, head, right shoulder, or the weekly chart you could say it's just a higher low and then we're going to head higher again. So we're in a little bit of no man's land here, and I feel much more confident about the dollar bull market once it breaks above this swing high here. So once it breaks above that level there, 95 roughly, that would be quite nice, and then we'll start heading back towards 97 again, start seeing some dollar bullness coming to the market. So how did that affect Aussie dollar? So Aussie dollar last week, if you notice, I've now moved my trend line, my key level down a little bit to 75 now. The reason why, although the level at 775 is key, 75 is also a decent level there. It's some decent moves off it. I did obviously, did take a long position off it and get out because it was a nice trade there, so I like that. And I did also say we'll head towards 77, which if you look now, we're just flirting around that area now. We are. At the moment, that isn't a trade to take short just right now. It needs to develop more, and I feel we may head up higher a little bit, test 77 properly. And if you notice in the past, these trades, if you look here for example, this one here, you could say there's a short position there, then start heading downwards, and all of a sudden it then pops back up again. So you want a decent, clean respect there. So what I'm waiting for this week really is just for something to develop here. I want some institutional money to come in now and start pushing this market back down again, but I think we need to wait a little bit. I don't think it's going to be one of these pushed back down again. Even up here, it took 2 tests a day, 50 EMA here to move down. So I think if you went short now, you're premature, because if you did go short, you're going to have to put your stop somewhere safe, and somewhere safe is something around like here somewhere for 110 pips. That would be what you think is safe, and even then it's not particularly safe because 775 got level there, key there, key there. So I would say hold off for the moment, don't be trigger happy just yet, and just see how the market develops. So there's that 775 area, and as you can see, it's been respected quite a lot. So 77 is the level, but 775 also been respected. So be careful there. On the weekly chart, the chart that looks like at the moment, it shows you it's broken back into the triangle again. And so for me personally, it's a kind of just, like I said, sit back, wait and see. You could, again, this is the problem with trend lines, you can now adjust it and go, oh, that's the new trend level there. And go from that way there. So again, it's perspective how you view the charts, and like I said, I think for this to head down lower, it needs a bit more pressure there to go down lower. On pound yen now, pound yen on the weekly chart, we're kind of just testing this trend line again, but we know we can break that down to 147.5. If you look on the daily chart, I did say last week bullish and bearish, there's signs for both. And on the intraday chart, to show you that one quickly, I was talking about a break and retest of this upward sloping trend line and then come back to test 52. Didn't really test 52, we come crashing back down again. So personally myself now, I do feel we may head back lower again, down to the lows of about 48 again. How we get there and how long it takes is a different scenario, but that's what I feel will happen next. If you look on the 1 hour chart, the trend has changed nicely. Here's your there's some lows there, these are lower lows. I have to change some of these lines as well briefly, I will, but this is what we're looking for. So pull back up to the 1 hour 50 EMA would be quite nice. Likewise, you could draw a trend line like that as well and still say pull back to 51 is also viable. And yet if it does pull back to 51, you are still going to be in the area of actually being bearish, so just bear that in mind. Now euro dollar, I did say there was a possible head and shoulder pattern on the 4 hour chart, and you could go long. It was a very, very choppy chart. Now this isn't really clean. It's not nice at all now. And to be quite honest, I just want to see myself now personally. I would like either a test of 1.2 or break and retest of 1.16 before I really commit any decent capital to this trade. Now it's just messed around. It's just not the greatest no more either. The euro on some news did power up, then it devalued itself again, so it's just a mess, to be quite honest. On the weekly chart, what does it look like? Well, we've got this personally myself, we've got this like formation here where it might be now you get a triangle out of this, it might be doing something like that. You really don't know at the moment, guys, and that's why I'm very indecisive about this. I don't like the chart no more at the moment. I would like a test of 1.2 again, because that would really then put the emphasis to go short properly. It would. Institutional money would actually get in at value at 1.2 to actually sell the euro and buy the dollar, and that does give a much better probability than where we are now at the moment. So that's all for this week at the moment. Any questions, shoot me an email or pop them in the comments. Hope you have a good week. Take care.